Example 1.5. Okay, so now what we do is, again, it's the same as in the previous examples. We're just adding something extra to it. In this case, it is trading stock. Right, so the first thing is, guys, I'm just going to remind you, so all of the opening balances, all of these things, right? Let me actually also make a point. Yes, trade credit and shareholders loan, those are all liabilities. We only care about equity. All right, so you would start with the same thing with the opening balance. Everything is the same here. This you should all recognize from the previous examples. If you haven't watched the previous example, you didn't follow it, please go back to that. I'm not going to explain it at all now. Then in this question, I'm going to just show you, we had the land that was sold, and we had a machine that was sold. Those things are still the same. Here's the accounting profit on the sale of the land, the accounting profit on the sale of the machine. We did the tax, here's the calculations for it, and we did the tax for it as well. Sale of land, sale of machine. All of that is exactly the same as in the previous example. So if you want to do that, take this moment now to pause this video and do the calculation of everything up to that point. Okay, then, now we are going to look at the trading stock. So, they say, the trading stock had a cost of 400,000 rands, and at the time that the liquidation took place, it had a market value of 740,000 rands, and the stock was sold for its market value. Okay, so, the first thing we do is we go to our accounting profit. What did we do for accounting with this? So, it's the sale of stock. Okay, the first we have the selling price for the sale of the stock, 740,000 rands, and cost of sales. Remember, this is now accounting. Our cost of sales is what? 400,000 rands. Okay, so that net effect there, 340,000. So in our calculation, sale of stock, 340,000. So everything there is the same. Now we look at our tax liability. So sale of land, sale of machine, everything is exactly the same as it's been. Now we have our trading stock. So guys, what do we do with trading stock? The first thing is, for trading stock we have an opening balance, section 22.2. Low of cost of market value, it's that 400,000 rands cost that we claim. And then we have a selling price of 740,000. Okay, so all I just need to do here is I now have to add up all of my capital gains, 4 million rands. My inclusion rate, I'm taking a little bit of a shortcut here, guys, it's 80%, and that gives me a 4 million rands taxable capital gain. Okay, this is just the normal adding everything up, guys. I just had to delete it previously to make some space. Okay, and that gives me 12,340 as my taxable income, and the tax on that at 28% is 3,455,200. Okay, so our tax liability 3,455,200. And let me just take a quick look. Yeah, everything perfectly correct. All right, so we add up everything. $13,584,800. What is the dividends tax? If there's a shareholder, if the shareholder is a natural person, it's at 20%, so 2,716,960. And if it's a company, that's nothing. All right, now let's go and do the tax for the shareholder. So the first thing is the dividend that we received, 13,584,800. 13,584,800. Full amount is exempt. Okay, 13,584,800. Proceeds is the contributed tax capital amount, 4 million rands. The base cost on that was 6 million rands. Gives us a capital loss of 2 million rands. If this is a natural person, okay, was it 100% exempt from income tax? Remember that's that first issue there? Yes, it was. Was it 100% exempt from dividends tax? No, because we had to pay dividends tax. So the exempt dividend is null. So paragraph 19 says that capital loss of 2 million, how much of it exceeds this null? The full 2 million. So the full 2 million rands will be allowed as a capital loss. Okay? Now, if it is not a natural person, but it is a company, we say, is it 100% exempt from income tax? Yes, it is. It's the same concept. Is it 100% exempt from dividends tax? The answer is yes, it is. So the dividend amount is, the exempt dividend is 13,584,800. Yes, the dividend amount, 13,584,800. So now we say, how much of that 2 million exceeds 13,584,800? And the answer is null. So no amount will be allowed to be claimed as a capital loss. And up to this point, guys, this is the most common ones you can see. If you can do this one, I would expect you to be able to do the majority of them. One example left. We'll look at it in a second.